The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to our BURSA Malaysia Derivative webinar. Thank you so much for tuning in. My name is Shane, I'm the moderator for this webinar. And to ensure that you can hear us, I just want to do an audio check. So on your screen, there is a webinar control panel. Do you find it? So there's a button to indicate that you raise hand. So if you can hear me clearly, can you please click raise the hand button? Okay, I'm seeing some hands now. All right. Thank you. If you can hear me now, yeah, please put down your hand. Thank you. All right, we have an incredible turnout today, and today we have an amazing turnout. We feel very encouraged. Of course, the first step to success is by showing up. As you know, our maximum capacity for this webinar is about 100 packs, and this webinar we have about 200 over people subscribe and enroll for it. So we are, yeah. So today this is a very sold out program. Now, for those of you who are watching right now, you're the one of first 100% who attended. So I want to congratulate and thank each one of you for showing up early to learn about trading in futures, how you can get started in futures, how you can build your futures with futures. All right. So now our topic today is about getting started in futures. This webinar is approximately 90 minutes long and consists of two segments. The first segment is 60-minute content by our speaker, and it followed by a 30-minute Q&A. Of course, the timing is tentative, but because sometimes we may have overwhelming questions, so the speaker may spend more time to answer the questions. So first thing first, I'm going to do a disclaimer. Now, as usual, the information, whatever we share in this webinar is only for educational purpose only. So in no way that the Bursa Malaysia derivative or the presenter accept liability for your financial decisions. So yeah, we just dissect all the just want to dissect futures with you so you can learn how you can get started with futures in a safe way and that can bring you the result that you want. So this series of webinars is brought to you by Bursa Malaysia Derivative and is managed by LifeChamp. So without further ado, let me show you what we have in store for the next next 3 months. All right. So now we're at the webinar number 2, which is getting started in futures. In next month, 5th October, we have understanding KL futures, and then 26th October we have a futures trading plan, and then in November we have risk management for futures, and ultimately in December there's a futures analysis. So we have 6 webinars planned for you, and if you complete this series, you will be able to understand the basic ideas about how to trade futures, and subsequently it's the experience that counts, and if you trade more, then you will be a very competent futures trader. So let me introduce our renowned speaker today, who is also an author of Getting Started in Futures. Now, Ty'ng Ty'ng, if you have tuned in for the first 2 webinars, her name is no longer unfamiliar to you, and she started her career as a futures dealer in AmFutures and was subsequently promoted to the head of futures dealing. Now, she was responsible in formulating and execution of futures trading strategy for institutional, corporate, and retail clients. Of course, she's also a CPE speaker for SIDC and Asia Banking School, providing training for fund manager, research analysts, remisers, and futures brokers. And then, of course, she has done a lot of training and speaking in terms of futures to a lot of people. And he's also one of the best-selling author, okay, for Jumpstart Your Stock and Futures Trading on a bookshelf. So, and she passed all the modules required to be licensed in both equity and future trading in Malaysia, administered by Security Commissions Malaysia. So without further ado, I just want to hand over the control to Ty'ng Ty'ng. All right. So Ty'ng Ty'ng, I'm going to make you the presenter now. All right. Okay, here you go.
Hi, good evening, everyone. Can you hear me?
Yes, I can hear you.
Basically, I don't think that I need to introduce myself, but today I will be talking a bit faster because today our content is still another day that is very packed. So it's about 40 over slides that I need to cover for today. So it's about 60 minutes being allocated, so slightly faster. And apologize for today because my voice is a bit sexy. I am still down with flu, but anyhow, let us start with today's session. I don't need to introduce myself. Please just call me Ty'ng Ty'ng. Today's session will be divided into 3 sessions. First session, we will teach you how to get started, exactly how to get yourself started in the actual trading environment for derivative. This is a frequent asked question for the previous 2 sessions we are going to cover today. Second session, we are going to cover about order types and fees. What are the fees involved in derivative market? What are the order types being involved, and what kind of order types that individuals or traders you can use? And the last session, we are going to talk about futures trading plan. This is a simulation game. In Malaysia, there's no platform. I would say that there's no trading or broking houses providing trading platform that's you can do a simulation. But this platform will allow you to do a simulation. I will touch in details later. Now, let's start with this first session, getting started. Basically, how to get started. Firstly, the first question commonly being asked is, why Malaysia? Do you need to start in Malaysia, or can you start with foreign products? Like, for example, can you trade your futures in Hong Kong, in US instead of Malaysia? My answer is yes, definitely you can do that. But as a start, my encouragement to you, I do encourage you to start with Malaysia market. There are a few reasons why you need to start with Malaysia market. Now, why trade in Malaysian market? First, look at this part. No currency risk. As you understand, if, for example, you trade in US market, you are exposed to currency risk because of your exchange risk. When you exchange, there's a currency risk, and you're exposed. Sometimes the volatility for our currency is quite high in a way. So there's in a way, not only the products that you are trading that you're facing with certain risks, like for example, market risk, your trade risk, etc., but you're also exposed to currency risk. But if you trade in Malaysia market, you're using Ringgit Malaysia to trade. There's no currency risk. Second advantage why you need to trade in Malaysia market, or at least to start your futures trading in Malaysia market, is because of home ground advantage. Definitely, you can see whenever anything happens in Malaysia, for example, from economic perspective, from political perspective, you will know in advance, or at least you will know on time. By then, any impact towards the market itself, you will know. But let's say, for example, you're trading in US, any news, you might get it later. Second, when there's any news, you might not know exactly what will be the impact towards the market itself. So there's a disadvantage when you go for overseas market. So as a start, personally, I encourage you to go with Malaysia market first. Now, the third will be your convenience of trading hours. As you understand, Malaysia market, basically you start at 8:45. You will end about 5:15 for FKI, 6 o'clock for your CPO, or go slightly later. But basically, it still remain under Malaysian hours. But let's say if you trade US market, when you sleep, there are daytime. So basically, you need to stay late into the nights. So if you trade US market or other markets, you are exposed to this kind of convenience of trading hours. You might not experience that. That's why you need to start with Malaysia market. Last advantage for trading in Malaysia market is easy access to information. You can find that this information is very simple for you to access. For example, what kind of newspaper that you need to read, what kind of portals that you need to access to, what kind of news portals that you need to go with it. A lot of information, you will get it on time. That's the reason why sometimes when you trade in Malaysian market, you will get this kind of advantage. That's why many investors or traders will ask me, do I need to start with Malaysian market? My answer is definitely yes. Once you can handle Malaysian market, then only you go for overseas market. Another thing that did not highlight in this part is about volatility. Comparison-wise, Malaysian market, the volatility is not that high compared to other market. So when you can master the low volatility market, then it's easy for you to trade in high volatility market. So my personal advice to you is start with Malaysian market. Now, how to get started? First thing, definitely you need to select a futures brokers. As I mentioned previously, basically all the investment bank, they have a futures arm. You can trade your futures trading with any of the futures brokers. Like for example, is investment bank, you have M-Bank, you have CMB Bank, you have RHB Bank. These all banks, they have futures arm. But public bank, they do not have futures arm. This is an exceptional case. Other than that, majority of the investment bank, they do have futures broking department. Now, later stage, I will show you a list of futures brokers that you can go after. Now, how to select a brokers? There are a few criteria that you can take into consideration before you decide which brokers that you want to open your trading accounts. I'll give you some examples that you can do take it as a reference. For example, first one, you can look at their trading platform. Some of the trading platform, they do not charge. Some of the trading platform, they do charge. Some of the trading platform, they provide interactive chart, for example, for your analysis to ease your analysis without any charges. But some of the trading platform, they did not provide this kind of interactive charts that you can do your own analysis. So you will need to check with them whether they do provide this all at no cost or at what type of cost that they are going to charge it to you. Second, you can look at their commission being charged to you. Different broking houses, they charge different commission. Now, commission is one of the important decisions that you need to make, is because it will impact your net P&L, which is they will impact your net profit and losses. So if you get a lower commission, then your net profit and loss will be higher in a way. If your profit, it will be higher. If it's losses, definitely will be higher as well if you are getting higher brokerage. So it depends on what kind of brokerage that they are giving to you. Third, that you can take into consideration will be their services. Some of the broking houses, they provide very good services. Whatever you need, they send it to you. They give you whatever that is required. When you need to withdraw money, they basically withdraw for you as soon as possible. When you need to bank in, the procedures is simpler. So you can check with them what kind of services that they provide to you. And another items that you can look into it is maybe in terms of their research report. Many of the futures broking houses, they provide research report. Check with them what kind of research report that they provide to you or they do not provide, etc. So these are some of the criteria. Normally, people can make their decision based on this type of criteria to select a futures brokers. Okay. Now, after you select a futures brokers, basically you need to apply for trading accounts. Futures trading accounts is simple compared to stocks. Stocks, there are many things that you need to fill in because you need to submit for your CDS account opening, etc. But for futures account opening, basically is simple. So to apply a trading account is not that difficult, and you just need to bring along whatever your IC, your bank statements, your salary slips. These are the basic documentation required by respective futures broking houses. So you just need to bring these basic things like your IC, your bank statements, your salary slip. Now, coming to the third step is you need, subsequently after you apply for a trading account, basically majority of your trading account will be approved provided you are defaulter list, you are under the defaulter list, or you are a bankruptcy. Other than that, normally the account opening form will be approved. Now, once your account being approved, you can determine mode of transaction. What do I mean by that? Either you can go for online or you can go for offline. For example, if you go for online, means that you key in your orders by yourself. Personally, I encourage you to go for online because your commission rate will be lower. Another thing, futures, the volatility is slightly higher compared to your stocks. So sometimes by the time you call in your orders, the price already moved. So it's better for you to go with online. But you can still go with offline, which is a very traditional way. What do you mean by offline? Offline means that you call in to your brokers and place your orders. But generally in futures market, 90% are using online trading. Step number 4. Subsequently, once you determine this, or you can deposit money into your futures trading account. And once you deposit, definitely you can start to trade, perform your trading. Now, the whole process from the time that you apply, submit your account opening form, it takes about 1 to 2 days, and you can start to trade. Yes, it's correct. It's only 1 to 2 days. Subsequently, you can start to trade. It's very simple. Compared to stocks, it's relatively simple. As I mentioned, it's because, for example, you do not have CDS account. So it's relatively simple. The whole process, majority of the broking houses, they can settle within 1 to 3 days, I would say. But you can say some of the broking houses even finish within a day. So by tomorrow, you can start to do your trading. It's quite simple. Now, many of you previously asked about the futures brokers that you can select. There are a list of it. Now, take a picture about this screen first. I give you some time. You take a picture about this screen. Then I'll try to explain to you. Now, look, you just log into BURSA Malaysia. Every one of you should know how to access to bursamalaysia.com. Once you access to BURSA Malaysia, you can see at this tab, you see a tab called derivative. You click on your derivative, then there's another drop-down column. You click at list of trading participant. At the bottom here, you click at the list of trading participant. Okay, once you click it, they will show you a list of brokers by according to alphabetical order. You can see A to Z. Roughly in Malaysia, we have about near to 20 futures broking houses. So basically, those listed under this list of trading participants, they are licensed futures brokers in Malaysia. You can call them and get your account open with any of the futures broking houses. For example, when I click on A, you can see there's AmInvestment Bank Berhad, you have AmInvestment Bank Berhad. Then if you click on C, you will see CMB. So there are many futures broking houses you can access to it. There's a list of it. So I repeat, if you based on this BURSA Malaysia, you click on derivative, then you click on list of trading participants. Then you will be able to access to a whole list of futures brokers in Malaysia. Now, come to session number 2, order types and fees. When it comes to this session, I need to go a bit slower because it involves certain technical terms and also certain technicals that you need to understand. But I will keep it as simple as possible to enable you to kickstart, at least to kickstart. Certain things you just understand in level 2 or level 3. Now, we just want you to kickstart at least to understand how to do your futures trading. Now, in Malaysia, for stocks, basically in Malaysia, you only have one order type, which is limit orders. That's why so far you never experienced any issue when you want to buy or sell, because majority of you might not even aware that actually for futures trading, there are 4 order types. Now, in Malaysia, for futures itself, basically we have 4 order types. Actually, there are more than that, but majority of the futures broking houses, they only limit their user or their clients to have these 4 order types, namely limit order, market order, stop order, and stop limit order. Now, as default, that means when you click buy or sell, if you don't select, by default, they will show you a limit order. It's a limit order. Later stage, I will explain to you different order types. What are they? How to use, etc. Now, I repeat, for Malaysian market, we have 4 order types. First is limit orders. Second is stop orders. Third is stop limit orders. And the fourth is your market order. Now, for today's session, and for beginners, you just focus on number 1 and number 2, which is limit order and also stop orders. Don't do for stop limit orders and market orders. Now, when you start with limit orders and stop orders, as a beginners or as an individual traders, this is more than enough for you to trade. You don't need to actually go for stop limit orders and market orders. Once you are very familiar with stop orders, automatically you were able to understand what is stop limit orders. And the last part for market orders, personally, if you are individual investors, I don't encourage you to use market order. I repeat, especially for those who are trading below 50 contracts, there's no point for you to go with market orders. So basically, market orders are for those advanced traders. And market orders is very dangerous for beginners. That's why today I will focus to cover limit orders and also stop orders, these two order types. The rest, just forget about it. Very soon, after you start to trade, you will understand what is stop limit orders, what is market orders as well. Now, for limit orders, look at this. When you submit a limit orders, as I mentioned to you, if you don't do anything, when you click buy or sell, automatically this order type will show as limit orders. Now, what is exactly limit orders? Let me define for you what is limit orders. Limit orders is you want to buy at a specific price or better. I repeat, what is limit orders? There are two important keywords. At a very specific price or better price. Specific price or better price. Means what? Afterwards, I show it to you. Repeat. For limit orders itself, you need to understand the definition means that you are going to buy at a specific price or better price. For example, if I'm going to buy one contract at 1766 versus I'm going to buy one contract at 1768, this is the actual trading environment. Look at this column. This is a bid and ask column. Look at this, focus on this. What is the difference if I queue to buy one contract or I limit orders? Yeah, I don't change anything. So if I'm going to buy one limit orders at 1766 versus if I'm going to buy one contract limit orders at 1768, I give you 20 seconds. Think about it. What is the difference between these two? Before you think, I repeat, limit orders definition is you are going to buy a contract at a specific price or better. Now, I give you 20 seconds. Think about it. If I'm going to buy one contract at 1766 versus I'm going to buy one contract at 1768, what is the difference? Look at this actual bid and ask. What will be the difference? Do you get the answer? Now, you see, if you're going to buy at 1766 means, I repeat the definition, you're going to buy at this specific price means that I'm going to buy at 1766, or better means that any price below 1766, I will take. Now, if I buy at 1766, because right now, buyers is going to buy at 1766. Seller, they are only willing to sell at 1768. So basically, if you queue to buy at 1766, you will join the bid here. Means that if you key in these orders, you will become number 2 here. You'll be the second one queuing to buy at 1766. Your orders will not get done immediately. Now, for example, if you decided to buy at 1768, again, limit orders is you're going to buy at this price or better. It will not get anything worse than that. So if you're going to buy at 1768, because seller right now is going to sell you at 1768, that is sellers willing to sell you at 1768, your orders will get traded immediately. That's why limit order is very simple. Limit orders, majority of you who are trading in stock market, you should understand limit orders work in this way. That means you will buy at this price or better. That's why many people will queue to buy. For example, I'm going to queue to buy one contract at 1762. These are all limit orders. Limit orders is the simple order type in futures trading environment. Now, this is your limit order. Now we move to slightly difficult order types called stop orders. Now, when you go for stop orders, you select your order types. You need to select stop. Instead of limit orders, if you're going to place a stop orders, you go and select a stop. Now, not to confuse beginners, basically stop orders is for user or traders to queue your stop orders. Now, stop orders is allow you to limit your losses. I repeat, stop orders is allow you to limit your orders. To limit your losses. I repeat, stop orders mainly for you to use it to limit your losses. Now, stop orders is very important when it comes to futures trading. That's the ways for you to manage your risk. If you do any futures, you don't do stop orders, you are in trouble. Trust me, stop orders is very important. Now, I give you an example of how to protect your downside. Think about it. If today you bought one contract at 1765, I repeat, you already bought one contract at 1765. When you buy a contract, you're expecting the prices to go higher or lower. When you buy a futures contract, you are definitely expecting the price to go higher. If the price did not go higher, if the price going higher, you are in profit. But if the price did not go higher and it start to retrace, you are in losses. So you need to put a stop orders to protect your downside. I repeat, think about it. When you bought one contract at 1765, you are expecting the price to go higher. Am I correct? Because if the price move higher, you are going to have profit. Repeat, buy low, sell high. So if you bought it at 1765, definitely you're expecting the price to go higher. If it did not go higher, you are suffering losses. Now, if you bought one contract at 1765, now let's say you tell yourself, I do not want any losses more than 15 points. I repeat, when you bought one contract at 1765, you tell yourself, if market against you, which means that if the market drop lower and against you, you are in losses, you do not want anything more than 15 points. What you need to do is you queue to sell stop orders. You sell one stop at 1750. Now, these two orders can key in at the same time in your trading platform. I go very slow. You already bought one contract at 1765. Now, you directly queue to sell stop orders at 1750. This sell stop at 1750 means what? If the market did not go higher and it comes down, reaching 1750, your orders will be automatically sold in the market and get done at 1750. And basically, you are suffering a 15 points of losses. I repeat, this part a bit difficult for those beginners, but if you can understand, then it will be very helpful when you go for futures trading. Try to understand, very simple only. When you buy, how to close a position, you must sell. That's why I'm using different color to differentiate it. So when you sell, but you cannot sell it at 1750, that's the reason why you need to use an order type called stop. Call stop means that it will not appear in the market at this point until the market hit 1750. Then your orders will be sent into the market and get filled at 1750. So definitely you will only suffer a 15 points of losses. Now, stop orders is very useful, especially those who don't monitor the market closely. In fact, for futures trading, we don't encourage people to glue your eyes onto the trading platform. I will cover in details when it comes to trading plan. It's very important for you to understand this concept. Once you queue your orders, get traded, don't look at the screen all the time. Normally, we will tell people maybe you log into your trading platform in the morning, then once during the lunch break, and once at the end of the day, or even once in the morning and one at the end of the day. It is more than sufficient. We are not asking you to go for speculation. So when you bought 1765, you can queue directly immediately at the same time to sell one stop orders at 1750. Now, what is the outcome? Now, when you queue to sell one or stop orders at 1750, it means that you limit your downside to 15 points. Anything more than 15 points, you don't want this type of losses. You don't want to suffer 50 points of losses. You don't want to suffer 100 points of losses, which is out of your control. So you queue a stop orders. Now, technically, when you do a sell stop orders at 1750, what we call it as you limit your losses. you limit it to 15 points. I repeat, when you buy, you're expecting the price to go higher. Now, if the market go against you, means that if the market start to drop, you have your self-stop at the bottom to protect your downside risk. Now, you limit your losses by these 15 points. You take 15 points times $50. Remember, each point in Malaysia is equivalent to ringgit Malaysia 50. So you take 15 points times $50. Each contract you lose 750. That is your maximum loss. Now, I repeat, that's your maximum loss. Now, definitely, stop, it doesn't mean that it will definitely hit at that particular point. But to ease those beginners, I'm not going to go in details. You just take it as stop will definitely limit your losses at this particular point. So, at the point that you queue your orders, you already know that it doesn't matter anything happens in the market, your maximum losses will be at $750. That's it. Okay? Excuse me. These are the two order types that you definitely need to understand.
Yeah. Ting Ting, I have a question. What if it gaps down?
That's why that's the part that for gap down, there's another ways to do what we call as stop limit orders. But for today's session, because many of you never used any stop orders before, that's why I'm not going to elaborate further. But once you start to trade about it, your brokers will definitely able to explain to you what if it is a gap down scenarios. But for start, especially those who never used stop orders before, I'm not going to complicate it, the whole scenarios or example. You just need to understand technically, it will limit your losses up to 750. Okay? I'll try to explain in future if we do any example for that, for stop limit orders or for stop orders, maybe for another levels. Because in Malaysia markets, generally, it's very hard for us to get anything more than 20 points of gap opening. For the past 10 years, the highest gap openings we ever have one time, it happens in 2008, is about 8%. Other than that, I would say that generally in Malaysian market, it will not happen. At least for recent few months, it will not. So for beginners, anyhow, the important message that I need to let you know is you must place a stop orders. Okay? Now, for fees. In Malaysia, basically, we have two types of fees on it. One is commission, one is GST. All the futures brokers, they will quote you one commission. They will tell you our commission rate, we charge it at, for example, ringgit Malaysia 15 per contract. Now, futures is unlike stocks. Stocks is by percentage. It's based on your values, your stock values to charge by percentage. But for futures, it is an absolute figures. It is an absolute figures. Actually, overseas market, for example, for US stock market, they are using absolute figures as well. But only for our Malaysia stock market, we are using by percentage. But for futures, we adopt absolute figures. And when the futures brokers quote it to you, for example, they tell you our commission, we charge it at 15 per contract, it means that they already encompass exchange fees, clearing fees, and also brokerage. Now, exchange fees is to be paid to Bursa Malaysia. Clearing fees is to be paid to Bursa Clearing House. And for brokerage is to be paid to broking houses. Now, second part, definitely you should know that all trading involve GST. Now, GST, how many percent? Definitely you all should know about it, is 6%. So this GST is based on your commission being charged. Now, I give you an example. How this all commission being charged, the calculation. Let's say, for example, any broking houses, they charge you, for example, this is for illustration purposes. Now, this $15, it will be varies for different products and for different brokers. For example, you trade FKLI and you trade FCPO, the contract commission will be different. You trade intraday and you trade overnight, the contract fees or what we call it as commission will be different. It depends. There's a reason why I put an extra is because for each products and different brokers, they charge differently. Now, for illustration purposes, to ease our calculation, everything, I use 15. Now, 15 contract, what we call it as round term. Round term means that when you buy, you definitely need to sell. So when you sell, one way you buy and you sell is a routed, what we call as one way. Two ways, to and fro. So when you buy and sell, what we call it as, for us, our terminologies is routed. So normally, futures broking houses will quote you in routed perspective. They'll tell you it is 30 per routed. It means what? When you buy, you need to pay 15 ringgit Malaysia per contract. Why I times 2 is because you buy one contract, you sell one contract. Total is ringgit Malaysia 30. Now, second part is GST. GST calculation is you are taking commission times with 6%. So the calculation will be RM30 times 6%, it will be $1.80. So for the commission, for all the transaction fees in total will be $31.80. Means what? When you buy and sell, your commission involved in total, or your transaction fees involved in total is $31.80. This one generally in Malaysia, one tick, you will make profit. I repeat, generally in Malaysia, all the commission quoted is one tick, you will make profit. It's quite simple. Comparison-wise, Malaysia futures fees is relatively low. The cost is relatively low. Now, I'll give you an example. How to calculate your net profit and loss. This is just now example being given. Now, assuming your gross P&L is ringgit Malaysia 250. You make a profit of 250. Now, after your 250, you need to know what is exactly your net profit. Your net profit, the calculation is you take your gross profit and loss minus off your fees. Now, so in this example, we take $250, you minus off $31.80, which is your transaction fees, your total transaction fees. Your net profit will be $218.20. This is exactly your net profit. Now, this is for you to understand. As you understand, in Malaysia, when you trade, when you open your account with futures broking houses, all your statements, they will auto calculate for you. And for future statement, unlike stock statements, they are easy for you to understand. Very simple, especially the monthly statement. Compared to your stock statement, monthly statement, it is relatively easy. But one glance, you understand how they calculate what is your net profit, how much you involve for this particular month, how much you're being paid for your commission, how much is your net profit, or how much is your gross profit, etc. Very simple. Trust me, once you started to trade your futures, you understand this very well. Now, what is overnight versus spread contracts? For overnight spread contract, next session, next webinar, they are going to highlight terminologies. Once they highlight the terminologies, they will definitely highlight about this outright and spread. And next session, we are going to touch about spread itself as well. Next session will be covered by another speaker. They will cover to you about this spread contract. For today's session, I'm not going to elaborate for this spread itself, but I'm going to kickstart you about what is exactly outright contract and what is exactly spread. It's a terminology used for the industry itself. Now, once you understand today, you can start to have a view. Because, like for example, even you don't open your account, you can access for these all prices through BURSA Malaysia. You go to bursamalaysia.com, you can access. Although the price feed is delayed by 15 minutes, but for you to understand the concept behind, it's easy for you to know. Now, look at this actual trading platform. This is the actual trading platform. The part that I highlight or I circle in red color, this all what we call as outright contract. Outright contract means that you are buying one specific contract, as well as sometimes we name it as naked position. That means you buy one contract itself. For example, you buy September one contract, means that you're expecting the market to go higher. That's why you're buying one contract of September for outright contracts. Now, the bottom, this part at the bottom here, which I highlight in green color, can you see that there are two contracts involved? One is September, October, one is September, December, or September, March, or October, December, October, March, December, March. They are based on this combination. Now, when you buy and sell, when you buy one contract and you sell another month different contract, this we call it as spread contract. This is what we call as spread. Now, The price here, basically, as a layman terms, we call it as different. I repeat, for spread, layman terms, we call it as different. What do you mean by different? For example, look at this September, December. This is a spread contract. September and December, if you view this September and December, the price, last done price, the difference is by 2.5 points. Can you see? You take 1764.5 minus your 1762, the difference is 2.5 points. This is your difference. That's why the difference between September and December, the price is 2.5. So spread, as simple as we call it as the difference, the price difference. Now, spread basically involves two contracts, but I'm not going to go in details because they are going to cover the details about spread, how to do your spread trading, etc. next class. So I'm not going to go details. I'm just only to kickstart you to understand about what exactly is spread contract. Now, for the last session, which is the futures trading plan, this is the simulation. Now, for you to understand in Malaysian market, to my knowledge, there's none of the futures broking houses, they are able to provide you with the simulation trading account. What we call it as a simulation trading account means what? For example, they give you a simulation account, then they give you a virtual amount. For example, they give you 100,000 to start. But in Malaysia, unfortunately, there's no trading platform able to provide you with simulation accounts. Overseas market, yes, they are, but in Malaysia, we do not have. But this platform, they are able to provide you with this simulation, what we call it as futures trading plan game. But actually, it's a simulation. Now, how to do that? That's why, can you see, I put it as futures trading plan game, or what we call it as simulation. That means it's a simulation games for you to understand exactly how to buy or sell. Because for the past 3 sessions, plus today's session itself, it will enable you to kickstart with your futures trading. We already teach you how to calculate your profit and loss, how to buy, how to sell, etc., how to monitor the market, etc. So it's easy for you to kickstart. For those who want to do your simulation, now I'll show it to you how to do a simulation. Let me click through for this first. Take a screenshot for this particular slides. You just screenshot. I will explain to you later. Just screenshot this slide, the step-by-step how to start with it. Okay, I believe you already screenshot. Once you already screenshot these particular slides, now I'm going to go in details step by step in vision mode. How to do it? Now, first, you log into www.bursamarketplace.com. You just log into this particular website. Okay, once you log into this particular website, you click My Market. You click My Market. Now, once you click My Market, can you see at the bottom here? You click My Futures. Okay, this is the third step. You click My Futures. Now, once you click My Futures, you click on Create Futures Trading Plan. At the bottom here, can you see this circle in red color? You just click Create Futures Trading Plan. Then once you click this, you just name it, any names that you want. For example, testing, simulation, or you want to name your name, anything that you like, or you want to name or for year 2017. You just create the trading plan name. For this platform itself, you can go until 2 different trading plan names. Other than that, you cannot do. So you must have 2. Basically, for us, you just go with 1 would do. For example, maybe you want to test different trading strategies, you can name it differently. For example, I want to test MACD, I name it as MACD. So for example, in this example, I'm going to type simulation. Once you type in, you just click create plan. That's it. At the bottom there, you create plan, then finish. I repeat, I just summarize whatever just now I show you in terms of vision. This is exactly the steps. For those who did not manage to capture the screen just now, capture it right now. This is the step-by-steps how to create your futures trading plan game. This is a simulation platform provided by BURSA Malaysia. It's very useful for beginners, for you to understand exactly how it works. Okay, let me proceed with it. Now, subsequently, now exactly you're going to start how to trade. Just now is the step-by-step how to create your futures plan, how to kickstart. Now, you can test it out later stage. If you have any questions, subsequently, you can still ask me anytime. Now, how to buy and sell? First, you go into add futures contract. You click add futures contract. Once you add futures contract, it will come to this page. Now, here there's a drop-down list. Right now, I cannot show it to you because it is not live. But afterwards, after this class itself, you can directly log into it. You can see immediately. It is live. Basically, for this platform, the prices actually change about 5 to 10 minutes. It's quite live. So you can understand exactly how it works and how your contract works as well. You can click and select the contracts that you are going to trade. You can trade FKL, you can trade FCPO, you can trade gold, anything. Basically, they provide 3 different products for you to trade. Now, this current price, you cannot do anything. You can buy at per the price given. Normally, for example, early in the morning at 9:30, you log in, you wanted to long one contracts. Whatever price during that particular time, it will be given. So let's say during that time, the price is 1785. You cannot change anything. You can only buy or sell at this particular price because it's for you to understand purposes only. So we don't allow for any queuing, etc. Then position, you can select whether to long or to short. Again, short is sell. For long is to buy. Now, once you key in these 3 things, the rest is not that important. For example, price, stop prices, you can key in what is the stop price that you wanted to go with it, what is your target profit. But this doesn't work exactly as per your actual trading platform. This is for you to monitor only. It doesn't work in the actual trading platform. That's why basically you just go for these 3 parts, then you click save and close. Once you save and close means that your orders already get traded. Okay, buy or sell. Now, you can monitor your performance based on these futures net gain or loss. This is exactly what is happening in the market. So if you have this 288,000 means that I'm making 288,000 as per the actual market itself. Okay, now I'm going to go through one by one based on this column itself. Now, you can see this is your contract. Either you're buying FKLI or FCPO. If you're buying CPO, they will show you as FCPO. Now, your position, whether you are long or you are short, and the date that you long or short. For example, in my case, I shorted on August 13 itself. The price that I shorted is at 1766.5. This is my average price and my gross P&L. And you can see this status already closed. Closed means that I already closed my position. I closed it on 30th of August, which is I let it auto settle. So I will show it to you later stage when your position is open. So this position already being closed. Very simple. They make it very simple for you to understand and by one glance. For example, today itself, I involve a position for long CPO contracts. I long for December 15. That's the last day to close for this particular contract. I already traded for December contract. You see, my position, I actually long it at 2817. My position remains open as per the time that I screenshot. Now, today market close, for your understanding, many of you should know that today's CPO market close quite high in a way. So let's say, for example, if today market close at 2850, I'm already making a profit. Now, how to close the position? Let's say this is your open position. What you need to do is, you just click this open position. You just click at open. Once you click this open, this pop-up screen will appear. They will ask you, are you sure you want to close this position? So if you want to close, then you click close position, then your position will be automatically closed. I repeat, if once you click, when your open position, you decided to close. For example, today, before the market closed, I decided to close my position. I just click this open. Once you click, it will show you this. They don't allow you to key in the price, but actual trading platform, they allows you. This one is to ease your understanding only. So directly, they will take the market price. So you click close contract. Once you close, you can see immediately, once the position is being closed, I make a profit at 325 ringgit Malaysia. Because I opened at 2817, and when I close it, I managed to close it at 2830. I make a profit of $325. That's it. It's very simple for you to monitor your position, and it's very simple for you to trade your position as well. Now, for the past 2 sessions plus today's session, we are covering those simple buying and selling, how to calculate your profit and loss. This simulation will exactly give you an idea of how the actual environment works. For those who do not want to open your trading accounts or do not want to actually put in your actual money, you can start with this futures trading plan game. You can start with this to simulate the whole scenarios, test your trading strategies before you actually put in your actual money. Because these platforms actually capture the exact prices movement in the market. So it is exactly like your trading platform. It's just like the certain click buttons or buy and sell button is different from your actual trading platform only. Now, this is one thing that we wanted to highlight because this is based on last session. Subsequently, there are many people subsequently asked me individual questions. Now, we are going to run a series of workshops. Means that it's a physical series of workshops that you can attend. It's a one-day course. And we are going to start this month, starting this month until the end of December, which is we have 4 months. Every month, we are going to run one session, different session. Our target audience for those beginners or those who not yet start to trade in futures or those already traded in futures market for 1 year or less than that, you want to know more about futures market, you can join this workshop itself. Now, this series of workshops, every month, last week of Saturday, we are going to conduct, except November. The reason behind is, as you all understand, December, many of us, we are traveling. You all will go for holidays, and school is having their holidays as well. That's why many people are not around. That's the reason why we moved the December session into the 3rd week of November. Now, this series of workshops, we are going to do it at BURSA, Malaysia. Now, these are the sessions. You can take a screenshot and you can attend. My personal advice to you is if you attend, you decided to attend, please attend all the 4 sessions because it is a series. It's interlinked. You can see that it is interlinked. Now, during this one-day session, we have guests being invited to cover about financial planning as well. It's about 1 to 2 hour session being allocated for them before we start with futures trading itself. Now, this session, we don't only cover speaking session. We actually have simulation games that you can actually experience on the spot. There's a reason why for those who register, you must bring your laptop accordingly. The confirmation emails will be sent a week before the events itself. For those who already registered, I believe some of you already registered last month, but some of you might miss out the registration. Now, as you all understand, you can register these events through bursamarketplace.com. Again, through bursamarketplace.com, once you key in, you go to happenings, marketplace events, then you can see a series of events being listed. A screenshot, for example, on 30th of September, we have this series of events. Then you can go and register. Unfortunately, we open for less than 5 days, 100 seats that we opened already fully taken out. And for those who attended last session and you couldn't get a place, you should know that there's no way for you to register, and we did not even open for any other platform for you to register. But because today we need to highlight about this series of workshops because we are going to start this month, we definitely need to give some special seats for today people who are going to register. There's a reason why you cannot register any other place, and through Bursa Marketplace as well, there's no seats for you to register. It's fully taken. We opened less than 5 days, already fully taken. Now, for those who attended today's webinar session, first 10 people who register, please provide your full name. In one line, you just put in your full name, comma, your contact number, comma, and your email address. You just type in. We will accept the first 10 who type in to register. Other than that, we are sorry. For those who successfully register, we will inform you. For those who do not successfully register, subsequently, we will give you a call and we will let you know. If you don't successfully register, you need to wait for next year, because this is a series. Subsequently, session 2, session 3, session 4, we give the priority for those who attended for session 1. Now, another thing that I need to highlight is for those who register, please make sure that you can attend, then only you register. Because there's one term we highlighted during the registration. If you did not turn up, subsequently after you register, next session, if you register, we will not give you the priority. Because we only limit to 100 seats, that's why please consider for those who really want to register. So make sure that you can turn up, then only you register. I highlight, we only open for first 10 person who fully submitted their full name, contact, and email address. You just need to type in. Once you type in, we get your information. The first 10 people, we will give your seat will be secure. Subsequent people who register, we will give you a call and we will tell you that you did not get the seats and you need to wait for next year. Now, during this workshop 1, we will be covering about how to avoid the 4 common financial traps, how to sail through the 4 stages of wealth accumulation safely. This to be covered by financial planner, which is the guest invited by us called Casey Lau. Now, for us, we'll be covering futures. Whatever I covered during the first webinar, second webinar, and this is the third webinar, some of it will be repeated because we have new people who come into the physical session. But we are going to add in more example to cover for you to understand better, because it's a full day course. More things that we can elaborate, more example we can provide to you. Second thing, we'll come in with a simulation game for you to exactly understand how what we are trying to cover during our course. So we'll teach you the methods, we'll teach you exactly how to use your futures contract to trade during, especially in the down market. We are going to cover the important function of futures trading and how to position yourself to win the game of futures. Now, for next webinar, the topics will be understanding KLCI futures. During this particular session, they are going to cover about spread tradings. They are going to cover exactly how to trade KLCI. They are going to give you an example exactly how to submit your orders based on your FKLI itself. KLCI futures, what we call it as FKI. So exactly they are going to teach you how to start with your KLCI futures trading. This webinar session will be covered by CC Yong and other speakers. I will be covering the subsequent session, which is the futures trading plan. Now, the date will be 5th of October on Thursday. This time will be the same, 8:30 to 10 o'clock. And the registration, definitely subsequently, you can click through and you can register. Now, this comes to the end of my presentation. I'm slightly out after 9:30, but hopefully I still in time. Now, this is my quote: successful trading starts with good trading habits. This is very important. You need to start with good trading habits. It doesn't matter you start with stocks or futures. Now, for those who want to ask me questions or you want to follow me to understand what is the events upcoming, etc., you can follow me through my Facebook. It's exactly my name, Choong Ty'ng Ty'ng. Please don't send me friend requests, because every session subsequently I receive a lot of friend requests. You just follow me through my Facebook. Now, I'm going to pass it back to Chun Xian for the Q&A session.
Thank you so much, Ty'ng Ty'ng, and I think you did a wonderful sessions. But just want to clarify that I think next session we won't be covering spread trading. I guess it's mainly on KLCI, understanding KLCI. I think we will do spread trading maybe in the 2018 term in terms of the webinar. Okay, but the speaker himself is a really exceptional spread traders. Anyway, yeah, if you have any questions you want to ask Ty'ng Ty'ng, yeah, you can write it in the question box, then we will address it one by one. All right, yeah, please ask questions. All right, and actually we have been receiving questions since 9 o'clock. So Ty'ng Ty'ng, I'm going to ask you direct some of the questions to you. So the first question would be, do we need to open CDS account when it comes to trading, futures trading?
For CDS accounts, no need. It is unlike stock market where you have a movement in terms of stocks because there's an ownership for stocks itself. For futures, it is only purely a contract. That's why there's no CDS accounts being involved. That's why just now during the presentation, I did highlight one thing. When you open your futures account, is relatively easy compared to your stock trading, because stocks, it involves CDS. The time being taken also will be slightly longer for them to process your account opening forms, everything. But for futures, it's relatively shorter because there's no CDS account being involved. Another thing is about spreads. They are going to cover in 2018, but just for your information, since they are going to cover in 2018, my advice for those beginners, my advice is try to avoid spread trading at the initial stage. Just go with outright tradings. There are many reasons behind. I'm not going to elaborate further, but mainly it's because for spread tradings, there's nothing for you to do it as a reference. So it's very difficult for you to follow. Another thing, for spread trading, you really need to understand the fundamental itself, which is normally for retail clients, you are lack of fundamental information. That's why my personal advice for all the beginners, try to go with outright trading. And don't forget to, whatever you are going to trade, cover and follow up with stop orders. This is very important. Try to learn first before you start to trade your futures. I always advise people, if you don't learn, don't go for futures trading. You better don't do, because if not, you're going to lose a lot of money. Okay?
Okay, yeah. So the next questions involve a little bit of calculation. So the question is, if KLCI is at 1,750 point, I guess he means FKLI. So if FKLI is at 1,750, if one contract is 50 ringgit, does that mean that if you buy one contract, you take 50 ringgit multiply 1,750 is equivalent to 87,000 ringgit?
If you all can remember, those who follow me through the last webinar, you all remember there's one session. There's the difference between your contract value and also your margin. What we call it as layman terms is your deposit. Now, your question is correct. The contract value is 1,750 times to $50, which comes to about 90,000, if I'm not mistaken.
Yeah,
This
87,000.
90,000, this 87 to 90, 87,000, this is your contract value. But to enable you to trade one futures contract, you just need to deposit 4,000. I repeat, the deposit in the correct terminology used is margin, what we call it as margin. You just need to have 4,000, you can already own one futures contract. This futures contract, with a deposit of 4,000, you can own a futures contract worth 87,000. Okay, this is clearly being covered during the last webinar. If those you need to understand in details, you can go back to the last webinars to understand in details, because I think I illustrate very clearly about how to do the calculation and what's the difference between the contract values and also the margin itself.
All right, so the next question is it true that although there is a sell stop, if not enough people want to sell at that price, you won't be able to sell it?
Okay, generally, your statement is correct. your statement is correct. But in Malaysian market, futures for FKLI and FCPO, I'm only highlighting these two products because they are the most liquid products traded in Malaysia. For FKLI and FCPO, the chances for individual or retail investor or individual investors for you to face with no people is going to buy or sell is relatively low. I repeat, for example, let's say you are predicting the market, let's say right now at near 2008, we are reaching 1,800 points. Now, if you believe that the market is going to crash, let's say you believe that the market is going to crash. From 2008, the market might coming down to 1,000. Now, you're having this perception only, or you're having this perception that the market is going to crash to 1,000, but there are still opposite people or people who are against your view. They might think that the market might go to 2001. So at the end of the day, because of the different in terms of the view, the market for Malaysia, especially for FKRI and FCPO, is liquid enough to cater for your stop orders, especially for retail investor or retail traders. You should not face with any issue for your stop orders.
Okay, excellent. So the next question is there a technical analysis tool that we can use on the BURSA marketplace?
No, at this moment, they do not provide, but they are doing some things. Subsequently, they might. But for your understanding, one of the reasons I believe they don't provide is because all the futures broking houses, I believe their trading platform, they do provide those technical, what we call it as interactive charts. That means that you can insert your own technical indicators, then you can do your own analysis. It just depends that whether the futures broking houses, they charge you or they give it for you for free. So you can check with your respective futures brokers. They provide this kind of services for you. But unfortunately, temporary at this moment for BURSA marketplace, they do not provide. They only provide the simulation games for you to trade because they just want you to kickstart. That's it.
Okay, I see. So the next question is about the futures trading plan on BURSA. Is there any chart on BURSA marketplace for reference?
No, at this moment, no.
Okay, so for all 4 sessions in the BMW, are they FOC?
Yes, you don't need to pay anything. That's the reason why you all really should thank BURSA Malaysia. Even this webinar itself and the series of the workshop, BURSA Malaysia, in a way, they are engaging us to do that. That's the reason why they pay on behalf of you all. So you all can attend the session for free and just learn. You all understand nowadays education is not cheap anymore. You need to attend a lot of courses to understand. But since BURSA Malaysia is providing this kind of learning opportunity, just grab it, and it is FOC. You just don't need to pay anything. BURSA Malaysia will pay on behalf.
Okay, excellent. So the next question is, can you elaborate what is good trading habits?
We will cover in details when it comes to the trading plan because there are a lot of things that you need to understand. Like for example, just now, do you all remember that I keep on highlighting one thing? When you place any orders, remember to follow with a stop loss orders. So you would always limit your downside. The problem with a lot of traders, for example, for those who already started to trade, you should know that the most difficult for beginners is to place the stop orders, especially when you are being hit one time, then you close already, the market rebound. Then you place the stop orders again, you're being hit, then the market rebound. Then subsequently you decided not to place. But this is not the correct ways to do. So I'll highlight in detail some of the trading plans, some of the good trading habits that you need to do during your tradings.
Okay, so the next question is, for the stop order, is 50 point the lowest you can set?
Okay, I'm not going to go in details. Basically, there's a range. If I'm not mistaken, for FKRI, they are allowed until 40. If I'm not mistaken, it's 20 points. I think it's 40 ticks. 40 ticks equivalents to 20 points, if I'm not mistaken, now from the last trading points. But I'm not going to highlight this all. The reason behind is this might in a way confuse a lot of people between the difference between the stop limit orders and stop orders. But generally, I just want to highlight one thing. Normally, you don't put a stop orders, which is very far. For example, if you buy one orders at 1,750 and you're going to place your stop orders 100 points away, which is like 1,650, for me, it's must as well you don't place your stop orders. You place it just because I asked you to place your stop orders. That's the reason why you place your stop orders, but it doesn't make sense when you place your stop orders too far away.
Yeah. So the next question is, what does long short position mean? What is close and open in futures trading game? What are contracts actually? So in one question, there are 3 questions.
Okay, first thing, the long and short, I already highlighted in webinar 1. Long means buy, short means sell. That's the terminologies used in futures. For those who maybe this is the first webinar session that you are joining, my personal advice to you is try to go back to the webinar number 1 and the introduction webinar and webinar number 1 to follow through, because every session we are not going to repeat whatever we already covered the previous session, and we just continue from there. So basically, long is for buy, short is for sell. Open means that when you buy, you make profit, but how you make sure that this is a realized profit? You still need to sell, right? So when you sell means that you already close the position. So let's say if you buy, then you not yet sell. We call it as an open position. So when you sell it, then it means that you already close your position. Sorry, Chun Sian, the last part is what?
The last part is, sorry, just now I deleted the question already. I missed it.
Oh, it's okay. I believe that you're trying to ask about the definition about the simulation game, which is your long and short, then your open and the closed position. So these are the main things that you need to understand. This all we highlighted very clearly and also explained in details during the webinar, the introduction webinar, and also the last series, the webinar number 1. Try to go back and re-listen to it or re-look into it.
Okay, so the next question is it possible to queue to sell and buy will take forever? For example, if everyone is selling and then it start to peak and then no one is buying?
This question is quite similar to just now the question number 2. That means you all are worried about the illiquidity about the market. As I mentioned, even many of you might think that right now the market is from 1,008, it might drop to 1,000. But I can assure you one thing, there are definitely different market views in the market. For example, at this point in time, how many of you believe that the markets will go higher from today closing? Let's say today closing is about 178 something. I rounded it up to 1780. How many of you believe that the market will go higher? I believe half of you might think that the market will go higher. But the other half might think that the market will start to drop because we have a very strong resistance at 1,008. So definitely the market view in the market itself will have different view. That's why the liquidity itself is not an issue. Secondly, some of the traders in the market, they hold for very short terms. Let's say they hold for 10 minutes only, or they trade for 5 minutes only. Because of the 5 minutes, they are having different view with you. So it's very different in that case. Because of this, the liquidity in the market is sufficient. So far, to be honest, my experience in the market for more than 10 years, is only once that we really experienced the illiquidity when the market really suffered. Is way back in 2008. That is also in, if I'm not mistaken, is in FKI market. FKI market suffered because of KLCI having a limit down. In a way, it triggered a circuit breakers, but I'm not going to go into details because if I'm going to go into details, you need to understand what is circuit breakers, etc. But generally, to make a conclusion or a summary of what the question is being asked, is just that don't worry about the liquidity itself. Market always having different view because of the holding period is different, because of the trading strategies is different. The liquidity will be always there, especially for FKLI and FCPO.
So for the previous example in a closed contract, the question is, how did you get a gross P&L of 300? Wasn't it supposed to be around 600? That was the question.
Oh, okay. Let me go back. If I'm not mistaken, just now I show you that particular simulation plan contract is, if I'm not mistaken, I try to recall. I bought it at 2817. I closed it at 2830. Now, this is different of 13 points. Am I correct? 13 points you times with 25. For FCPO, each point equivalents to 25. So it will comes to that particular level. Let me see. You see, it is 2830, 13 points. Give me 1 second. Yes, correct. Because I bought it at 2817, I closed it at 2830, I make a 13 points of profit. But for CPO, each point is only equivalent to 25 ringgit Malaysia, $25. That's why you take 13 points times $25, I make a profit of 325 ringgit Malaysia.
Okay, so the next question is, which broker has the most comprehensive facility in terms of interactive charts and other tools?
Personally, I cannot represent any futures broking houses to sell, and this is an education platform. So honestly speaking, I cannot do anything in terms of marketing or advertising any of the futures broking houses. But what you can do is, as I mentioned to you, there's a whole list of futures broking houses. You can approach those brokers and check with them what is exactly which brokers is the best, or which brokers actually suit your demand itself. You can approach them and ask whatever is required. For example, you can check with them what is their commission rate, what kind of services that are being provided. You can use the guidelines that I just now highlighted as a reference to ask those questions to those brokers.
Yeah, actually every broker has their own strength, I guess. So okay, so Ting Ting, you shared about limit order, and I want to buy at our specific price or better price. So can the limit order also apply when the trader want to sell as well?
The same. Now, just now, because we are running out of time, basically, we normally, when we give an example, we only give for one side. It's the same thing. When you want to sell, your limit orders, the definition would be the same. You can sell at a specific price, or in this case, when you are selling, it means that if it is a better price, remember there are two elements very important terminologies under this definition itself. One is at better price or at specific price. Now, for selling perspective, better price means that there's a possibility that you can get it at higher price. Then it is a better price, then only you will sell, or you will get traded exactly at the price that you queued. For example, you queued to sell at 1750, then definitely your orders will be get traded at 1750 or slightly better.
Okay, so is futures suitable for long-term trader? What happens if the contract ends halfway?
In terms of expiration, this is a repeated question for the past webinar. We noticed about it, but as I mentioned to you, one thing that I don't want to confuse those beginners. It's just for your information. To roll it over is very simple. It's a very minor things that you need to do. Maybe we will, because for this webinar itself, we are being given a outline to cover. Now, I will try to put into my notes, and I will try to cover in any of the session that I'm covering for the webinar itself. We'll try to cover for you about this rollover. But because this rollover itself, although it involves a very minor technical things, but it's quite lengthy for us to explain, because there's a lot of scenarios that will happen. So we will rethink whether we will cover it in details, or what we can advise you to do is you can approach your brokers. Once it comes to the last day itself, you can approach your brokers and learn how to roll it over. But if you cannot understand, it's very simple. What you can do is you just close the position. then you wait for the next day and you reinitiate a new position. That's it. So this is the simplest way. But once you started to trade, generally, I would say as beginners, normally people don't hold too long. So when you don't hold too long, actually it doesn't involve the rollover procedures. But if you are going to hold longer, if you are going to hold longer, you can approach your brokers and check with the brokers, ask them to teach you how to roll over. Okay, I think we are not going to highlight. The reason behind is this particular topic itself is quite lengthy. Although it's a very minor part, but it is quite lengthy because there are different scenarios to explain. Let me rethink and let us rediscuss about it, whether can we put in one part of the outline itself, or how can we do that? Then we will come back about this question.
Okay, now, so for the FCPO, there will be expiration date, right? For example, 15th of every month, and Bursa Marketplace volume high for month 3 onwards. So I was informed to only trade month 3 onwards. So does that mean that I don't trade for November after 15 September when the volume is still high, you know?
Okay, now for those who are beginners, you can avoid this question. If you can understand whatever I'm trying to explain, subsequently try to understand. But if you cannot understand, don't worry about it. Now, generally for CPOs, we will treat the third month, what we call it as a benchmark month, the third month. Now, I always highlight to people, you don't need to memorize anything. Whatever you want to trade, look at the volume. If it is the highest volume, you just trade. Normally, you will not have any issue, because if the volume is there, there's no liquidity issues, then you will not face with any issue, because your the things that you must concern, or you will concern the most, is whether you can get out or not. Now, normally the third month is the highest trading month, is because of the nature of CPO, which is there's a physical delivery. There's a reason why as a retail investor, you don't go for the first month or even the second month, because there's a tendency that you will go for physical delivered, means that your crude palm oil will deliver to your house if you forget to close it. Now, if you go for third month, which is the most liquid month, is the highest volume being traded, so you will not face with this issue. So not to confuse everyone, generally you only trade for third month itself. But sometimes, because third month, like for example, today already 13th of September. If today you are trading for November, if you're trading for November, let's say today you're trading for November, next week onwards, your November will become the second month. It's okay for you to hold for at least 5 to 6 days. You don't need to roll it over. It's okay, because the liquidity is still there. You just need to get out before the liquidity subsides. So generally, you can still hold your November, no issue at all. Just get it out or move it to the next month before the liquidity subsides. Means that you look at the volume before it retraces or reduces, then you must get out.
All right, so the next question is, when is the stop order triggered? When the price appear at buy queue or sell queue?
Okay, now I try not to highlight or go into details, is because I want you to understand the general concept first. What is exactly stop orders? If I'm going to go in details for these stop orders itself, actually it takes time to explain. There are many things, like for example, what's exactly the difference between stop and stop limit orders, how the stop orders works, and there are still other things, like for example, behind there's certain regulation regulate these stop orders and how it appeals. Now, for those who cannot understand this question, just forget about it. But for those, maybe there are some advanced traders or those already traded in the markets and you want to understand in details. Now, stop orders, the actual definition is you queue a stop orders. That's why when you queue a stop orders, you don't queue it as price, you queue it at trigger price. It means that when the market reach your price, then only your orders will be sent into the market. Once your orders send it to the market, they will get the next best available price. Okay, so it depends on whether you buy or you sell stop. That's why it depends whether you buy or you sell stop. Then it depends whether you are looking at your buy or sell price. Basically, they are taking at the last traded price. That means, for example, if I queue to sell a stop at 1750, I repeat, if I queue to sell a stop at 1750, if the last time price reach 1750, my orders will be sent into the market. Automatically, it will be sent into the market. Then they will give me the next best available price. Now, I want to highlight one thing. In Malaysia, for stocks and futures, there are different. For your stop orders in Malaysia, when you send your stop orders, your orders will be queued directly in BURSA Malaysia. It will be housed under BURSA Malaysia. For your stop orders for stocks, for your equity, for your stocks trading, your stop orders, some of the broking houses actually do have stop orders, but we call it as synthetic stop orders. These synthetic stop orders is actually those stop orders being housed by the broking houses itself. But futures is very different. Your orders are already directly into the exchange. So once it reach, the orders will automatically sent into the market. So it's based on the last done price.
All right. So the October full day workshop at Bursa is not open for registration yet, right? Because I can't see it at the Bursa Marketplace. That's the question.
Yes, you're right. We only open for the first session. As I mentioned to you, this is a series of the workshop. That means every session is interlinked. So you will see that subsequently after the first workshop, we will open on the spot for registration for session workshop number 2. We'll give the priority to those who attended workshop number 1. There's a reason why until now we don't open for any registration, unlike workshop 1, which we opened 1 month before. But it's just that many of you might not aware about it. But because we open for less than 5 days, it's already fully taken out. But for workshop 2 until 4, we don't open for registration towards the public yet. But for those who attended workshop number 1, don't worry. If you attend the workshop number 1, on the spot, you will get to register for workshop number 2.
Awesome. So last question is 1 tick equivalent to 1 point equivalent to 50 ringgit?
Okay, this is a very good question. We try not to cover because sometimes to kickstart a person, we only cover those that allows you to kickstart. Slowly, once you kickstart, many things you will realize by yourself that, oh, it works in this way, etc. Now, we never highlight about the terms called tick. Now, 1 point, it doesn't mean 1 tick. For FCPO, 1 point is 1 tick. It is equivalent to Ringgit Malaysia 25. But for FKLI, if you remember the contract specs, which they are going to highlight in details next webinar, they are going to teach you the contract spec about FKLI itself. 1 point, actually there are 1 point, every minimum fluctuation is 0.5 points. This minimum fluctuation is what we call as 1 tick. Now, for FKI, 1 tick is half a point. It means that it's equivalent to Ringgit Malaysia 25 as well. Because 1 point is Ringgit Malaysia 50. You divided by 2 each is $25. So I repeat, 1 tick doesn't mean that it's equivalent to 1 point. Like for example, for FKI itself, 1 tick itself is only equivalent to 0.5 points. This 1 tick means minimum movement. Like your stocks, your $1 stocks, your minimum movement is 0.1 cents. That means it's 1 cent itself. So less than that is 0.05 cents. So it depends. For FKLI, every minimum bid is 0.5 points. For FCPO, every minimum bid is 1 point.
Yeah, this fantastic answer. So now we have coming to the end of the webinar. So I would like to thank everybody for joining our session 2, getting started with futures. If you want to join the next webinar about FKLI, so the next speaker will cover in detail what is FKLI, what is the contract spec of FKLI, and how you can trade FKLI. You can you can enroll through the link that I sent via the checkbox. Yeah, for the rest of you, I've noticed there are a number of you who sent in your details on the questions, so we would submit your names to Ty'ng Ty'ng so that she can process your enrollment. So with that, I want to thank everybody for being a wonderful audience this evening, and may you have a pleasant rest of the day. Yeah, bye bye.
Thanks a lot.
Yeah, thank you, Ty'ng Ty'ng.